G'day there, traders and friends, market participants, and enthusiasts right around the world. You are here with James on behalf of Pivot Point Trading as I provide you with a weekend market update. The markets have just closed as at Friday, and during Friday's days or the intraday's worth of trading, it has set up another rather interesting candlestick. It does fit, I guess, the construction of what we saw on Tuesday. This does resemble that of a hangman at resistance. However, during the session on Friday, we tried to push on down below some of these key rising exponential moving averages, which I'm zooming on in the detail right now for you, but we weren't able to close below both the 20 or the 10 rising exponential moving average on the Dow Jones Industrial Average. So we're getting a little bit of mixed sentiment moving into the weekend. It does set up a very interesting week's worth of trading upcoming. We have a number of companies in our top 12 individual trade list which are transitioning through their earnings calls. So it is going to be a very busy week upcoming. But really, in this particular weekend market address, I just want to take the time really just to go through some of the trades that we've been speaking about, and also keeping a close eye on also because it has been another tremendously profitable week. Maybe you're in some of the trades, maybe you're not in all of them essentially, maybe you're in some, okay? But at the end of the week, you need to take the time at least to just be grateful essentially for some of the rewards, for some of the gains that we see trading the markets week to week. Obviously, you get some up and down markets, or at least up and down weeks worth of trading. But when you smooth the process over maybe one to 2 months, you'll start to see, of course, your capital account grow if you are effective in what you do. And it's very important that some weeks, I guess, in the area of technical analysis, we can come to an overwhelming, I guess, understanding of where price action should move to. And when we're in those moments, it is very exciting to be a trader. There are other weeks, of course, where the markets themselves are a little bit bifurcated in that it is very easy for them to break either one of two directions. And essentially right now, if I can just sort of condense this down into some sort of narrative in this weekend address, it does sort of, or the way the markets are positioned right now, it can obviously lead to a breakout. I mean, if we start to see some movements above certain key areas of resistance and swing high breaks, well, then everything is good for this market continuation to the upside. However, having saying that, the way the market is positioned at this particular point, and with earnings upcoming, it is also a rather delicate market. We didn't see the real follow through, which we were sort of expecting this week. I mean, the Dow Jones Industrial Average closing down close to 60 points, although it hasn't done any material sort of damage to the structural picture. It has been a rather slow week. The past 5 days worth of trading hasn't really seen that breakout that we have been expecting, and it's something to pay attention to. We've got a couple of doji candlesticks, also some inside day bearish candlesticks. However, we've also tried to, I guess, gain some traction with some bullish momentum, which just simply hasn't played out at this particular point. So I'm not here to confuse anyone whatsoever. All I'm saying is that the market itself is rather delicate, and it does also fit quite nicely with, I guess, the unknown of what these companies are going to produce in the week upcoming, especially with some of these big tech giants, which are set to announce their earnings for the week upcoming as well. So again, the Dow Jones Industrial Average was relatively flat. The S&P 500 gained a little bit more traction. If I change to the weekly candlestick, you can see we closed up 13.27 points. I mean, a pretty nice week for the S&P 500. We started to see a little bit of a slowdown really Thursday through Friday, but even Friday's trading session, it started quite weak, but we again pushed on back up into this area of resistance, what has just been a little swing high on Thursday. So everything is looking rather constructive. The oscillators are still supporting this market across the board. You can see that on the Dow Jones Industrial Average as well. The the S&P 500 is also supporting that. And if I change to the NASDAQ, you can see that we are still holding up above this very important range bound area of resistance, which we've been struggling to overcome really for 2017. So we're pushing up into new all-time highs. The market hasn't retraced whatsoever. It is a possibility that we come back down and retest some of these old resistance areas as new support pivot points, which I'll be speaking about in the weekend address in the pro analysis class. But again, it's setting up a relatively interesting week's worth of trading. Just to go through this list ever so quickly, Apple, for instance, above 148.44, it's still holding up. It's at 150.27. Had a little continuation entry for the week upcoming. Personally, I'm not in this continuation entry at 149, but it is still holding up relatively well. So that's a pretty favorable trade. Amazon is still holding up and around this resistance area. It looks as though we're back testing this pivot. We have earnings coming up this week for Amazon. The same is true for Boeing Airlines. Boeing Airlines has been in a very profitable trend for a lot of people. 187 was the original breakout, 192. was a secondary entry to, again, additionally add to the original position at 187. We hit our target at 198 and also 199. Then we've broken above that most recently at 206 and also again at 209.44. You need to close this trade out for a profit prior to that earnings announcement for the week upcoming. Baidu is pushing back up into resistance, although we're not in this personally. It is going to be interesting to see which direction that earnings gap eventuates. Caterpillar also holding up around resistance in the green box. Earnings, I think, is scheduled for Tuesday, so this is going to be an early trade for us next week. COP and CVX are both smashing into support, so just think about the expression or the term turbulence, very similar to what I was speaking about with Apple a number of weeks ago over here, until we form, I guess, the real base for these two particular stocks, COP and CVX, to really launch off from. We do have earnings upcoming, so I mean, if you're looking for a new trade over the next 1 to 2 trading sessions, you should really think twice about that on those two particular stocks. Google's still bullish above 960, 870. You should have been out of that trade by today's session on Friday, just to sort of lock in some of those profits and just to be sort of neutral moving into earnings. Goldman Sachs appears to be breaking down below the support line. I'll be speaking about that in due course also. IBM is still holding below 148.09. Personally, I'm not in this trade. Again, I don't like to trade counter trend. The overall market itself is still looking quite healthy. It is rather established to the upside, and it just doesn't really fit the sort of the profile, or I guess the sentiment of the market at the current time. But it is rather weak, having said that, IBM, and there is a lot of opportunity for that to really sort of tank over the coming weeks. So I'll be addressing that also too. We have Netflix breaking above that 185.93. It closed at 188.54. So we've made about $2.50 on this trade so far. We did build the structure, especially on Wednesday and Thursday. Friday, we started to really aggressively push above it. It was looking exceptionally bullish intraday on Friday, but it pulled back a little bit. It closed a little bit off its highs. It's still looking quite nice, that particular stock as well. Tesla's coiling. This is exciting. This is something to pay attention to, and I will be walking through this in great detail over the weekend. If we change into this subsequent sort of list that I have on my screen also, Disney slowed down on Friday. It is still looking quite nice. 107.09 it closed at. Entry was 105.70, so we're starting to build a little bit of traction. I think it's only a number of trading sessions until we hit 108.21. Then we can recalibrate that trade. Facebook has been another stock that we've really hit out of the ballpark. I mean, just to, always remaining humble, but this is something that's just produced a lot of profit for a lot of people around the world. I was stopped out on Thursday at 162.84. You can see that there is still a little bit of money on the table. I mean, on Friday we closed at 164.43, so it was up another $1.60, so to speak, between my personal stop and where it's currently trading at. That is a little bit of profit depending on the number of call options people are holding, but I'd suggest that you liquidate this position rather soon because we do have earnings which is scheduled for Wednesday. HD has just tanked, especially tanked on Thursday. It's holding up on Friday. It's something that, I mean, it looks exceptionally bearish. It's whether or not we have follow through. My support level on this is 144. So once we get down to 144, we'll have a look at the analysis and then we'll just look at possible bidirectional trade opportunities on HD. Which is going to be very interesting, very exciting as well. LUV is pulling back into this area of support, which was once old resistance. So, I mean, potentially this may swing. It can also break down, but we do have this earnings announcement also on Thursday. Micron Technologies is coming back up into resistance. This is going to be a very neutral trade. This is a pivot point that we can essentially bidirectionally trade as well. So, I mean, I can almost recalibrate the trade itself. I can bring this bearish entry down to 30.77, keep the bullish entry up at 33.15. I'll have a look at Fibonacci expansionary levels on this in due course, but right now just pay attention to this pivot up here because this, I mean, in terms of candlesticks, it's really going to unlock the sentiment as to which direction MU chooses to move. To finish with, we have X. X, of course, is United States Steel Corp. It's pushing back up into 24, that 24 area. Our entry was at 23.26. I mean, we're above the entry, but look, we're not really gaining. We're not really pushing as aggressively as what we would have liked to have seen. We've got multiple areas of resistance. 25.70 is one, but really my target on this is as high as $30 a share. We do have earnings. Earnings is expected for Tuesday, so that's a wild card. Close out of this if you're still in it. If you haven't closed out of it on Friday, be sure to close out of it by Monday. Now, there's a lot also going on in the world of commodities. I just want to say a big warning for those of you looking to trade gold or silver bullish. I would certainly tell you to reconsider these trades if you are looking at them rather optimistically at this particular point. They have now bounced into no man's land. They are essentially in the dead zone. and it looks as though they're sort of skating on thin ice, so to speak. So I would not be launching into long commodity trades, nor would I be looking to aggressively short the US dollar after the sort of nosedive it has been on over the past couple of weeks. I'm going to be speaking about that also in this recording over the weekend. One other piece of analysis, and this really sits quite well when we start thinking about intermarket relationships, is that of what is occurring on the transportational average. Now, the transportational average has broken above resistance. It's looking very, very favorable, very, very bullish, but we've seen this pullback. Now, a lot of people are sort of, I guess, becoming concerned with this sort of breakdown of what appears to be a false breakout. At this particular point, it's too early to tell. However, generally what happens is when you get up into multiple areas of resistance, what we would assume to be a macro resistance area, you can see that this resistance has been holding since December 2016. Often once you pierce above it, you get the retest, and then you get the subsequent bounce. So if we zoom in on the detail, and if you pay attention to this current pivot, coming in at 9,471, you can see the construction of the first white candlestick. So this is at the base of the green box, which has been drawn on my screen for a number of weeks. It's almost expected, almost. It's just a repeating pattern, more or less, in the world of technical analysis that you can pay attention to, keep an eye out for, and it gives you the opportunity to recalibrate trades or also to add to existing positions if you're already in the trade. So for the Dow Jones Transportational Average, this is still a bullish breakout. It is essentially a backtest of the old pivot, and you should be looking to potentially buy the bounce if it does eventuate over the coming weeks worth of trading, if not 2 weeks. So if you see, again, the construction of a series of bullish candlesticks around this pivot, it doesn't have to sort of necessarily explode or move parabolically to one side. But if you see, again, a little bit of a gridlock, or at least the structure building around this area in terms of buying support, it is going to be a fantastic opportunity for the transportational average to really continue what has been a bullish breakout. You can see the ADX, which is trying to turn up on this pullback, but the CCI is still printing very close to that positive 100 line, which is indicating that the trend itself is sustainable and appears to be legitimate. We're also holding above that rising 50 exponential moving average. So that is more or less a very, very, very quick market update. Again, moving into the week upcoming, it is rather delicate. I think, or it looks as though the market itself is going to be moved by what happens with a lot of these companies, which are set to report earnings this upcoming week. So if you don't feel comfortable essentially jumping into trades immediately, I wouldn't blame you. But having said that, there is going to be a lot of tradable opportunity in this list over the next 5 trading sessions. I want to thank you, first of all, again, for listening to this market analysis. If you would like to learn more, please join me in that analysis class, that recording which I post up over the weekend. Outside of that, everyone, enjoy your weekend. Spend it wisely away from the markets, and I look forward to bringing you more pertinent market updates throughout the week upcoming. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.